Hello, I'm Nigel Fitzackley from NGU, and I'm here today with Gary from the mortgage brokerage, and we're here just to discuss what's going to happen with the Bank of England because we're coming up to 12 o'clock, the last Bank of England decision before Christmas, and what we think is going to happen to interest rates going into that decision. So, as always, Gary, I'm mega excited about this decision. What about yourself?
Yeah, looking for. I think we'll have a chat of like where we think it's going to go, but I do think that going into 2025, I'm optimistic. I think the mortgage market will grow by about 10% on average. I think we're expecting a couple of at least Bank of England base rate cuts. Maybe not today. I think it'll hold, but going in the future into 2025, I think there'll be a minimum of two cuts, possibly four, depending on what the experts say and how the effects of this budget, which you will go and do now, Nigel, a little bit, how that's going to affect the economy and growth sort of thing. But yeah, optimistic for 2025.
Well, myself, so Gary's a mortgage broker who covers the entire of the country, but I'm a estate agent, letting agent, do refurbs in the northeast. So I always talk about the northeast. Gary will talk wholly about the entire mortgage market and can help anyone anywhere in the UK. But in terms of the northeast, we're still powering ahead with house prices. Largest growth in the UK, up 4.7% over the last year, so decent move in terms of house prices in the northeast. Rent still powering up 10%, I'd say. They're saying it's 8.7 when it comes to the inflation. To be honest, I'd say it's more like 10, but maybe overall there's certain areas which aren't increasing as much as the northeast. So where are we on the economy? So the economy essentially has an effect on where we think this interest rate decision is going to go. Inflation came in slightly higher than the Bank of England thought, 2.6 versus 2.4, slightly higher. Wage inflation remains high. So the bank's kind of a little bit worried about inflation going into 2025 is where we are. I think the biggest driver in all of this is literally the budget. That national insurance increase, 25 billion, is massive. And how that's going to affect people's pay rises and jobs going into next year. And it's how the Bank of England looks at that and thinks how that's going to play out. The word on the street, or when I chat to people, is jobs ain't going to get replaced. Pay rises ain't going to be as high as they were going to be because companies need to try and recover that money. So that's
Yeah.
going to have a drag on the economy as far as I can see. They're saying there's going to be more money to spend from the public sector, therefore it's going to drive growth. I think there's a larger effect in the private sector. There's a pain. We've all got till April. Everybody who makes money for themselves to try and get this money back, which the government's going to take off us. So that's the big piece in play. So, Gary, I'm going to let you give an update in terms of the mortgage market, what you're seeing on the street, what you're seeing, what's happening in terms of where mortgages are, and I'll keep an eye on this decision.
Yeah. So realistically, since we last spoke, Nigel, on the last Bank of England meeting, yes, they actually decreased the rate. However, what we found is lenders, because of the budget and a little bit of uncertainty, they actually raised interest rates. So even though the Bank of England dropped, lenders basically actually increased their rates. So that didn't help clients at all who have been sitting there expecting to sort of benefit from a rate decrease. What I've seen today and yesterday is several lenders, actually main high streets from the buy-to-let lenders, have actually dropped their interest rates today. Now, I don't think that's a factor with regards to what the Bank of England are going to decide today. I think that is because they want to basically have a good pipeline and basically a bit of confidence in the mortgage market going into 2025. And they want to basically a good start at 2025 in January. So it's the same as what we're seeing at the start of this year when rates were sort of a little bit uncertain high. Halifax come into the market the first week of January, dropped their rates by 1%. I think we'll see a bit of movement regardless of the Bank of England's decision today, where lenders will basically advertise some appealing rates to get the market moving again, give it a good start for the first quarter of 2025. Where I do a lot of buy-to-let and investment mortgages for clients, which what we're seeing still at the moment in time is the fees that clients have got to pay for their buy-to-lets, whether that's a 3% fee, a 5% fee, or a 7% fee, lender fee. That's still a bit of a kicker for clients at this moment in time. So when we're refinancing that, it's a sort of hard pill to swallow at the moment for some of these landlords who have got a big portfolio, trying to fit their portfolio within the stress tests so that they can then refinance. All the experts.
Got the decision actually. So interest rates coming into this meeting, we're at 4.75. They're still at 4.75. So there's been no movement in interest rates. It was 100% bang on. This wasn't going to happen.
Yeah.
An interest rate cut. What we're looking for is February, split-wise. 9 members of the MPC, 8 voted to cut last time, 1 voted to remain on hold. It's now 6-3. There's still 3 people who think interest rates need cutting at this point in time, which I think is quite interesting, actually.
Yeah.
And to be honest with you, that's where I'd be, because in terms of vacancies within the job market going like this, GDP going like this, employment going a little bit like this, but is it going to go like that after Christmas? You know, there's a little bit of worry, I'd say, in the market. And if I was if I worked for the Bank of England, I'd be slightly worried about the jobs market, because where is this labour growth going to come from? That's the question we're asking ourselves. And I think it's a total mess at the moment. I think there's no incentive going into like the first half of next year. Cut cost, try and make up this national insurance increase, businesses, which means anyone who leaves your company, do I have to replace them? In terms of annual increases in salary, can I get away with giving people less? There's going to be a lot of that going on for the first 6 months of the year. And I think it's going to be a tough 6 months, especially if you're in employment. So it's interesting. People are saying there's only 2 cuts next year. There's 2 cuts. There's already 3 people who want to cut it now. You know, so I suspect that 0.5% is more like 1% next year. You know, or the market's underplaying what the effect of this budget is going to be. So that's quite interesting. In terms of Gary, back to your point in terms of mortgage rates, I had this exact conversation with Gary last year, actually. 1st of January, all the lenders opened up their mortgage books and got super competitive in terms of rates. They were coming in with new rates, decreasing rates, chasing a bit of the flow. And I think from what you're saying, Gary, that's what you expect come the new year.
I'm going to expect it again in the new year. Just off today and yesterday, you've got some of the buy-to-let competitors and the main players, and you've got some of the high street main players. They're not dropping them huge, 0.2, 0.3, but I think it's just the warm-up to the new year to get their book basically working for them and basically hit their first quarter so that they go into the new year themselves with basically more business and a bigger pipeline than that the company have got.
Yeah. So what I'd say to people is, look, we're 6 days before Christmas. Yeah, right. Gary needs a rest. Look at him. He looks like he's been working hard all year. I know I've managed to get him on this call, and he's sorting out a client today, and he's stacked up before Christmas. Get yourself, you know, enjoy Christmas, enjoy your new year. But if you want to remortgage, definitely contact a broker. Gary's around if you want to contact him from the mortgage brokerage.
Yeah.
And just try and get hold of some of those early rates. If there's something competitive or something looks quite nice to you, get involved in it come the new year. There'll be a few decent rates coming out as we get a little bit of competition into that market. So that's what I'd recommend. And we'll be back again in February, 6-3. I think we're on for a cut in February. I think at 6-3, we're on for a cut in February. But we'll find out. Trump's coming in. Anything can happen. So
exactly.
Yeah. Anyway, take care. Merry Christmas, Gary. Yeah.
Merry Christmas, Nigel. Thank you.
All right. Cheers. Bye.
Bye.